Hello everyone, welcome to my first ever video. Bear with me, I'm still getting used to editing and putting things together and recording in my car with my phone in front of me. This channel was kind of built to give you guys advice. I'm not a financial advisor, I'm not a health coach, I'm not a therapist, but I think that I could provide insight that could help you grow as a person. And if I could inspire one of you guys to make a positive decision in life, and if I could help you guys make some money or help you guys grow, I think that'd be great news. So I wanted to basically explain how I was able to basically start from zero. Let's just say, I don't know, I had about maybe $500 to $1,000 in my bank account after college. Luckily, my college was paid for academically. I had an academic scholarship, and my dad was able to use some of his GI Bill towards me and my brother, and we were able to leave college with a degree, and we were able to be debt free. So I kind of started ahead of the curve, right? I didn't have student loans to pay. I didn't have any sort of debt going into my growth of accumulating money. But yeah, I'm 27. I only had one job before I joined the military. I'm currently in the military. That's my occupation. I'm an enlisted person, right? So I'm not an officer, E5, and I'm 27 years old. I joined at 22. Going into the military, yeah, I was debt free. I didn't have a car. I lived on base for 2 years. During those 2 years, I was on base. I didn't have a car. I was walking to work every day. At the time of me being 22, I did have an investment account. I did have about $1,000 or $2,000 into that account. During my military training and whatnot, I wasn't investing, so I just had $1,000 to $2,000 in there. They were all invested in a company called NIO, which is an electric car company. It was kind of during the peak of NIO, so I think there were maybe 30. I don't have any graphs in front of me, but at the time it was about maybe $40 to $60 a share. And then after graduating basic military training, it dropped hard. And that was the first time I was like, wow, okay, this is what happens when you put all your eggs in one basket. And I kind of strayed away from investing during that time. I just started saving money, right? That's the main thing I did to accumulate those $1,000. I'm a very frugal person. I'm not really into materialistic things. When it comes to a car, as long as I get something that takes me from point A to point B, that's fine. I'm really big into gaming, which is why I got the Fortnite footage in the background. You guys could watch me catch dubs while I'm teaching you guys life advice. And I wouldn't say I'm an extrovert. During the weekends, I'd rather have time to myself. I'd rather go fishing, hit up the beach, watch a little bit of anime, or go on YouTube. So that's kind of the basics, the basis as to how I was able to form some of my habits when I was younger. And between 22 and 27, that's when I started learning about a high yield savings account. That's when I started learning about what could happen if I invested a lot more into my investment account, so that way it could start to snowball. And what could happen if you put your money into like a Roth IRA or something like that, a retirement savings plan. But for the military, we have one called the Roth TSP, which basically means that when you put money in, the taxes get paid up front. So in the future, when you withdraw your money, when you hit a certain age, it's all tax free. So that's what I'm doing. And I could make a video about that later, but I know that there may be a chance that a large majority of this audience may not be in the military, so I don't want to rant over that in this video. I'd rather make a separate video. When you take the ages between 22 and 27, within those 5 years, I was able to grow basically from a couple $1,000s to $100,000. And in the future videos, I'll definitely show you at least my stock portfolio. I won't show you all the stocks I invest in, but I'll definitely hit on some of the big winners and the big losers, so that way you guys could really see with your own eyes what happens in the stock market, and what happens if you put all your eggs in a basket, or what happens if you, follow the trends and you're not really doing your research. What could happen to your stock portfolio, and how volatile the stock market can be, because I think that's something that people need to be aware of. A lot of people, they'll see these people that doing day trading and maybe crypto and all this stuff, and they think, okay, this person is doing it, so that means I could do it. But They're not seeing all the work that person's putting in behind the scenes, or maybe that person's using additional tools, or they're getting help from somebody else. Or worst case scenario could be like clickbait, it could be a scam. I want my channel to be an honest channel where you're actually seeing the ups and downs of what I've gone through. When I hit about 23, 24, I moved a majority of the money I had in my Navy Federal checkings account and Navy Federal savings account. It had an APY of maybe 0.1 a year, right? So if I had, I don't know, $10,000 in that account, I would have only made a couple cents a year, right? So I took that and I put that in a high yield savings account. And the growth rate obviously fluctuates, but it was always about 3.5. I'll make a video on that in the future as well. All right, so the military would pay me. I'd have some money going into my checkings account, but ideally a lot of the times it's only a couple $1,000s, right? So that way I mentally see that account every month and I'm like, okay, mentally I pretend, okay, this is all the money I have, right? This is all the money I have. I cannot spend more than what I have in this account, which is normally between, I'd say, $2.5 to $3,000. The rest would go into my high yield savings account, and I do that through automation, right? So every time the government would pay me, I'd have an allocation that automatically goes to my high yield savings account. So that way, the money gets deducted from my paycheck before I even see it. That's important as well. Then I had another allocation that got sent to my Roth IRA or Roth TSP, whichever one you guys have, or a retirement plan, whatever that is. So you'd have another chunk going there through automation or through an allocation. And then I had another allocation go to my brokerage account, which I use Schwab. Schwab and Fidelity are normally great, trusted investment sites. So that is where all my money went. So every month to this day, those four things happen. Money goes to those four accounts every month from my paycheck. So you got checkings account, high yield savings, Roth TSP, and brokerage account. So I did that about maybe by the age of 24. I was consistently doing that. So between 24 and 27, in the last 3 years, I really have gotten to see my money fluctuate. Obviously, I can't touch my Roth TSP. I'm kind of thinking of that as my safety net when I get older. And let's say maybe if I'm retired, maybe I want to increase how much I pull out of my account each year. I know there's like retirement formulas you could do, like, I don't know, the safe withdrawal rate, right, from your investments account. I don't know, it's like what, 4%, something like that. But that's kind of my safety net. My high yield savings account is kind of like, that consists of my emergency fund. Normally I have a goal, I want to kind of have that between 15 to 20K, because I do have like a family on the way. I have a kid on the way, so I have to increase that savings amount because I'm soon to be a dad. And then I have my brokerage account. And for me, I'm a very, very risky person. I like to kind of take the risk, right? Because I consider myself young. I'm 27. I know some people may think I'm a bit old, but I'm still in shape and I could still run. I could still move. So I definitely have aspirations when it comes to that brokerage account, right? Because I want that to be my leading horse when it comes to accumulating wealth. I'm kind of banking on that brokerage account to skyrocket in the next 10 to 20 years because I'm a long-term investor. I don't believe in day trading or stuff like that. That's just how I roll. I like to see it as I haven't done enough research. To each their own. I'm not a financial advisor. You guys could do what you want with your money, but I'm just explaining how I was able to accumulate 100K in a span of, let's just assume, 6 years, right? So in 6 years I was able to do that. Obviously a majority of it was saving money, and not only saving it but investing it, saving it and investing it, finding that balance, finding that happy medium, and being consistent. I've told myself, hey, once I invest in a company, there needs to be very, very strict rules as to when I need to sell that company. Obviously, if the company skyrockets and makes an astronomical amount of profit, I may have to think about selling early. But I do plan on holding each stock I invest in for about, at a minimum, 10 years. at least 10 years just to see what happens, right? And I find that stuff very important because I'm a long-term investor. I don't bite easily when there's drops in the market. I'm not a panic seller. I don't do any of that. I have a very high tolerance of risk, and I don't really get stressed out or worried about it too much. And in the future videos, I'll definitely go over some scenarios where I'm down right now. There's some scenarios where I was down big, and I'm still down to this day. I'm just not down as big as I was back in the day. Or I'll talk about, hey, I've made these kind of gains in these companies. And obviously with AI and all the technological things that have been happening in the last, I would say, year or so, there's been a large drop, I'd say, in technology stocks, and the average price, right, the 52-week highs of each stock have kind of dropped. But I see it as a buying opportunity, and as long as you pick companies that you trust in and companies that on paper have the necessary means to buy, the sky's the limit, to be honest, especially if you're a younger person, right? Because if you're younger, that means your money could grow for a longer period of time. If you're older, your money could still grow, but you would have to put in a lot more than a younger person. But yeah, this is the Life Equilibrium, giving you guys an update on how I accumulated 100K. I gave you guys the 4 different areas that I put my money in. And in the future, I do plan on showing you guys graphs, maybe giving you guys some hypotheticals of, hey, what would happen if you put this much in a high yield savings account with this much interest a year? Or what happens if you put your money in the stock market and it returned a certain rate each year? This is how much money you could have. I definitely plan on doing that. But stay tuned. Like and subscribe. This channel is going to grow. This channel is going to gain traction. My ultimate goal is to show you guys my investment kind of growth. And my final goal is to hit $1 million in my investment account. If I could do that on YouTube, and if I could show you guys the growth and the ups and downs of my investment, and it could inspire one of you guys to be like, hey, I can do it just like him. I just got to stay consistent. I got to do my research. I got to live below my means a little bit. I'd be very happy if you guys are able to comment, hey, I made this change because of you, and because of that, I've been able to do this, this, and this, or I've been able to acquire this much more money. I'd be over the moon with that. So I really appreciate you guys watching this video. Stay tuned, and I'll see you guys in the next one.